7 trading terminologies to make 10,000 US dollars monthly. This is possible, guys, and I'm gonna be showing you how to make 10,000 US dollars every month by learning these 7 trading terminologies. Alright. The first one we'll be talking about in this video is bull and bullish. This simply means the same thing, and it is positive price movement. When the price is moving in the positive direction, you hear marketers and traders saying the market is bullish, the market is on bullish run, it's moving in bull position. I'm going to be showing you that on the chart. If you look at these two candles, you have this red, often called some call it doji or whatever, but just know as a layman know that this red, this green, this uptrend, this up candles simply means the market is bullish run at this point. So when traders say the market is bullish, it means the market is going up. At some point it was at this point, which is 152. If you look at here, it's 152. Then it started showing greens. The process of it showing this green is what they mean by bull, that the market is going into positive direction from 150 to 170 and the rest. So that's what they mean by bull or bullish, positive price movement. The second terminology that I'll be talking about in this video is dump, and this is a large sale of coin or of a currency. Dump, when the market falls in a very large falls very fast. That's what traders mean by dump. And I'll also show you that on the market as well. Let's say a very quick sell, and the market sell like very straight, something like this. The market started dumping from here up to this point. It happens as well. It dumps. When the market dumps, oh, this is a very big one, guys. It dumps from 178 up to, and I think it's still dump up to 133. That's a very large dump, guys, and dumps for several days, because all these candlesticks are daily candlesticks. Every day starts dumping, dump until 173, and that's what they mean by dumping. So they mean by dump, a large sale of coin or of a currency. Dumping, that's what it means. It means downward price movement, and the market continues to move downward. That's what they mean by dumping, and I believe you really understand that. It happens a lot because the market just goes from up to can you see this very quick dump, guys? Dumping, then it starts moving again, and that's it, guys. The next terminology we have on this list is pump, and it's simply the opposite of dumping, upward price movement. And you can see from 119 up to 134, and they say the market is pumping, like it's moving up gradually. Can you see from 124 up to 148? It's moving up. That's what they mean by market pumping, upward price movement. Next one, which is important one, followed by the one that I'm talking about, is FA, fundamental analysis. And as a trader, you need to understand, you need to have some reasons why you want to buy or sell in the market. This is the market. If you want to buy now, you have to have the reason why you want to buy. Why do you want to go on long? Why do you think the market will pump? You want to buy. Or if you want to sell from here, why do you think the market will dump? So before you can arrive at a decision, you need to use some analysis. You need to analyze the market, and there are two common ways of analyzing the market. The first one, which we'll be talking about now, is fundamental analysis, which is FA. Fundamental analysis simply means you taking maybe will I say external conditions that affect the market. We are talking about the news, that we are the fundamental things, the news, the companies that you see this Apple Inc., Nasdaq. If anything should happen to the Apple stock now, probably this will fall. If anything should happen to them, it will affect the trade. So you looking at the company, the news and the rest, that's what they mean by fundamental analysis. External things aside of what you are seeing here is what they mean by fundamental analysis. And a lot of traders enter their trade by using that analysis. They go on the news, see what is happening in the news right now, and they use that to determine whether they will go long or short, whether they will buy or sell, whether they believe that the market will pump or dump. So a lot of people use that to determine how they enter the trade. And the next analysis that market traders use to determine what they do in the market is technical analysis. And a lot of traders use this as well. Technical analysis is simply using what you are seeing on the chart to determine whether to go long or to go short. So you lose, a lot of people use that as well. For example, if you notice, like, and let me quickly show you an example. You notice that the market is pumping, like it's going upward. That's what you can see at the market for now. Let's say you don't see anything beyond this, or let's say by this you don't see anything beyond this. You notice that the market is going upward. So now you believe that the next candle is still going to go up because this is an uptrend. The market is pumping. So you enter a buy here or even a buy here. You notice that you believe that the market will still pump. The market plays out, it goes up because you can see that the market is pumping. Definitely continue to pump. And that's what they mean by technical analysis. You are trading according to what you see on the chart. So that's what I mean by technical analysis. And there are some traders that use both the technical analysis and fundamental analysis, and that is what is advisable. If you want to be a trader, you are advised to use both analysis to determine whether to go long or short on the market. You go on the news, notice what is happening in the news, then you come onto the chart, notice what is happening there, and you combine what you experience in those two analyses to determine how you enter your trade. And by doing this, I promise you, and by following proper money management, you make over 10,000 US dollars every month. That's just the case. Don't be among those 90% of those that lose their money on the market. They don't use proper risk management and money management. If you master your money management and risk management, you can easily make money on this trading journey. The last terminology that I'll be talking about in this video is the support and resistance. And support and resistance is simply price action due to supply and demand. And I will quickly show you that on the chart. Supply and resistance. Resistance is, if you notice, let me show you. There are some, it happens at okay, I think I can easily show you from here. Just look at this line. You can see the market touches this line like 3 times. Touches it here and here as well. This line, they call it resistance. Like the market is resisting the trade from breaking this resistance. It resists it 3 times at this point, and that's a resistance point. And if you notice at this part of the trade as well, 1, 2, 3, those 3 parts are the support parts. The market just touches them like 3 times before breaking the resistance. At times it will break the support as well, so you can't really say what is going to happen, but these lines give you an idea of what is happening at the market. You know that if the market breaks, it's going to continue moving up as it did there. After breaking this, it move up before coming down again. And that's what they mean by support and resistance. Traders, especially technical analysts, they use support and resistance oftentimes. And like I said, if you want to be a trader that wins on the long run, you need to use You need to use both technical and fundamental analysis to determine how you enter the trade. And with that, we have come to the end of this particular video. Thank you for watching, guys, and I will see you in the next video. Bye for now.